It's quite clear that AI is already making a huge mark on the job market. But how much of a mark exactly is it making? This is what Eric Bjornholfsen and co. recently explored in their paper called Canaries in the Coal Mine. It's an attempt to examine exactly the scale at which AI is permeated into the workplace. Let's go over some of the key highlights from this paper. In this paper, they outline 6 facts they gleaned from a vast amount of data they examined through the largest payroll provider in the US, ADP. This paper encompasses millions of workers and tens of thousands of firms. The first fact they find is that yes, indeed, there has been a substantial decline in hiring among young workers, particularly of the ages 22 to 25, in AI-exposed occupations such as customer service and software development. Both of these occupations have presented a similar pattern. Employment for the youngest workers' declines have been considerable after 2022, which is when AI started to proliferate, while employment for other age groups has continued to grow. By July 2025, employment for software developers between 22 to 25 declined by nearly 20% compared to its peak in late 2022. And here we can see a graph breakdown by headcount on the left and year on the right. We see from 2021 all the way to 2022, there was a steady increase in hiring. And then after 2022, there was a dramatic drop among early career from 22 to 25, whereas other levels have remained either constant or has grown. After 22 to 25, we see 26 to 30-year-olds have also suffered some decline. Basically, these age groups are simply placeholders for the amount of experience that these people have. And here we see the same trend for customer service. 22 to 25 going straight down. We have 26 to 30 somewhat declining, and then 31 to 34 pretty stable, but still not growing compared to before that. And the rest of them have continued to grow, although at a bit of a steadier rate than they were before that. Crucially, they compare this to other jobs that are not as impacted by AI, I would say yet. And some of these include aid jobs, marketing and sales, first line production. Here with marketing and sales, we see that from 2021 to 2022, there was a pretty steady incline. And after that, we've had a bit of a drop for the age groups 22 to 25. That's in blue. And then there was a sharp increase that has remained steady. So we see declines with that as well, marketing and sales managers, but not quite as sustained and dramatic as the ones we saw for customer service representatives earlier. In this second graph, B, we see first line production supervisors barely affected, and this has shown a continuous incline for all age groups, particularly the mid-career groups, but we can see that the 22 to 25-year-olds are still holding their own. They're still doing pretty well in this age group, in this job category. We also have stock clerks. There's barely any discernible difference in the growth rate. Same for health aides. Actually, for health aides, we see that the blue, which is again the 22 to 25, has peaked it's outpaced all the other age groups in terms of how quickly they are getting hired. So this really shows how much a job's AI exposure affects the type of hiring that it is able to continue on with. In these subsequent graphs, they move on from specific jobs to a more generalizable picture of how exposed a job is and how it is being affected by AI. Here we see again for early career workers, the more exposed they are, which is the darkest color, the quicker the decline, and the less exposed they are, the steadier it's been in its incline. And overall, it is quite steady. It's kind of plateaued a bit. In early career 2, we see a similar pattern, but not as drastic for the more exposed jobs. Regardless of the amount of exposure your job has to AI, as of now, your level of experience has a lot to do with how hireable you are and probably how safe and stable your job is going to be moving forward. The second fact is that though the overall employment continues to grow, employment growth for young workers in particular has been stagnant. A lot of the previous graphs we just saw already bolsters this second fact as well. But here they're going into more detail in suggesting that the overall employment remains robust, coinciding with a low national unemployment rate in the post-pandemic period. However, Figure 4 suggests some leveling off in employment growth for young workers relative to other age groups, consistent with recent discussion of potentially worsening job market for entry level. Here we see a similar graph as before, where going by the age group and the steady decrease between the early career workers and the more experienced workers in the red. I think actually the mid-career workers, 35 to 40, seems to be enjoying the most success in the hiring market as of yet. The third fact is that entry-level employment has declined in applications of AI that automate work with muted changes in augmentation. So already we've established that entry-level jobs that are exposed to AI are at risk of losing out on their job stability. But here they are taking it even further to specify that the difference between an automated job and an augmented job comes into play as well. Here's how they describe automated versus augmentation. To assess how employment patterns differ based on the complementarity or substitutability of AI with labor, we use data on generative AI usage from the Anthropic Economic Index. The index provides an estimate of the share of queries that pertain to each occupation. In addition, for each task, it reports the estimates of the share of queries pertaining to that task that are augmentative, or none of the above. We use this information as an estimate of whether usage of AI for an occupation is primarily a substitute or a complement for the labor. Basically, they're explaining their method for differentiating between automated jobs versus augmented jobs, where automated jobs are those that have been completely outsourced to AI, whereas augmented jobs are those that have been somewhat influenced by AI, but still require some human influence. And Anthropic has this index that discerns based on the query where it falls in that spectrum, automated or augmented, where the labor is simply being complemented by the AI as opposed to completely taken over by it. The fourth fact is that employment declines for young AI exposed workers remain after conditioning on first-time shocks. One class of explanations is that our patterns are explained by industry or firm level shocks correlated with sorting patterns by age and measured AI exposure. For example, one possibility is that young workers with high measured AI exposure are disproportionately likely to sort to firms heavily susceptible to interest rate increases. Basically, what they're doing here is a control to figure out, is AI really the reason why we're seeing these changes specifically among this age group, or are we seeing these changes because of other effects like firm level shocks or industry level changes, or perhaps economic changes, which they'll get into later on. After controlling for all these variables, they find that the graphs remain pretty much the same. We have jobs with more exposure declining, less exposure going up, jobs with a certain age group declining, jobs with other age groups staying the same or going up. But for all of these, graph after graph shows the same pattern, that even when they're controlling for other influences like firm level shocks, jobs that have been affected more by high interest rates, they still come out with the same or very similar patterns in their graphs, where certain age groups are affected significantly, younger age groups, and more experienced ones in less exposed jobs are affected the least. Very similar results. The fifth fact is that the labor market adjustments are visible in employment more than in compensation. They find little difference in compensation trends by age or exposure quintile. Essentially, a lot of the effects of AI is playing out in the hiring strategies of these companies more than it does in the way that they're compensating their staff. They give some credence to this fact by pointing out that a study by Utter and Thompson in 2025 showed that technology that replaces inexpert tasks may reduce occupational employment but increase occupational wages. Essentially, when technology takes over low skill jobs, what happens is that occupations go up for those who remain and are experienced, while the employment rate goes down for those who are trying to make their way in there, which makes sense because technology is doing those jobs. And I suppose the technology they're using here is a pretty broad term, probably not AI specifically, but AI included, since it was such a recent paper. It also shows that technology that replaces expert tasks may be doing the opposite, which is an interesting dichotomy to the previous finding. It shows that when AI is able to do jobs that experts are able to do, then we might start to see a decline in the wages themselves as opposed to the employment alone. This second bit is quite interesting to me because it suggests that when technology is able to do expert tasks, the opposite happens, meaning occupational wages would go down and employment will go up. The occupational wages going down when technology is able to do the job makes sense to me. However, employment going up when technology is able to do expert tasks does not quite add up to me. I'm curious as to how exactly that is happening. They go on and noting that the limited changes they find for wages suggest that these effects may be offsetting, at least in the short run. Alternatively, the results could be explained by wage stickiness in the short run, consistent with recent evidence. Essentially, it is far more easier to reduce the amount of people that you're hiring than it is to give people a pay cut. What I would be curious to know is whether the fewer young people who are able to make it into those AI exposed careers are being paid the same as they used to, or if they're being paid less as a result of the lack of need for them. Because they don't have that wage stickiness to worry about. You're giving them the wage for the first time, so you get to dictate the terms of that wage. And if they don't like it, well, it's becoming more and more difficult for them to get a job anyways. So they'll probably be more receptive to wages that are not ideal for them than previous workers of the same groups. The sixth finding is that these findings are largely consistent under alternative sample constructions. They start by excluding technology firms, and they show that employment changes by age and exposure quintile after excluding computer occupations corresponding to 2010 SOC codes that start with 15.1 figure shows results when excluding firms in the information sector. Results are quite similar. So they start by excluding technology occupations from their data to figure out whether the hiring increase that happened right after COVID, when firms were beginning to intake more and more people again, might have had something to do with the subsequent decline that we saw. Perhaps those firms had reached saturation and they did not need as many people anymore. However, they found that that was not the reason why we were seeing those declines. Actually, I think this part answers my previous question. It looks like these graphs are based on compensation, and we have the younger folk, the 22 to 25-year-olds, having an increased amount of compensation, even though they're being hired less. So this graph here shows that with health aides who are very minimally exposed to AI have had barely any change whatsoever. Marketing and sales, which we saw earlier, where I think there was a significant decline in the younger population. However, their compensation has remained quite well. There was a dramatic drop after 2024, but it looks relatively stable. So compensation looks quite stable across the board. And we see similarly here where regardless of the exposure to AI, compensation has pretty much remained the same. It's important to note that these graphs are different from the previous ones we saw, which were based on the hiring. That was more so about who was getting hired and who was not getting hired, employment. Whereas these graphs are showing how much people are being compensated. The results for non-teleworkable occupations in particular suggest that their findings are not driven by outsourcing or work from home disruptions, at least. So this is all in line with the idea that in non-expert jobs that are being outsourced to technologies, the wages are actually going up even though employment is going down. And we can see that the wages have continued to increase for the most part. We see it in all of these groups steadily, in some a bit of a decline in others, but definitely not as dramatic as the employment rates that we saw. And here we see the same picture still on compensation, not employment. They also control for remote work and find that non-teleworkable occupations in particular suggest that our findings are not driven by outsourcing or work from home disruptions, at least solely. They also control for education. Another possibility is that changes we observe are influenced by worsening education outcomes during COVID-19 pandemic. COVID-19 led to persistent harms in educational outcomes, as more educated workers on average have greater measured AI exposure. Deterioration in quality of education in recent years could influence the trends we've observed. However, the finding is still the same. Non-college workers experience may serve as less of a buffer to the labor market disruptions than for college workers. This goes back to the idea of skilled versus unskilled labor, experienced versus unexperienced. And the less experienced you are, the less educated you are, the more susceptible you are to the AI proliferation that we're seeing. They also check for separately men and women to see if there were any differences. What they find is that there's very similar results, suggesting that the divergent prospects for men and women are not driving the findings. They conclude here by stating the adoption of new technologies typically leads to heterogeneous effects across workers, resulting in an adjustment period as workers reallocate from displaced forms of work to new forms with growing labor demand. Such endogenous adjustments may already be happening with AI, with emergent evidence of shifts in college majors away from AI-exposed categories such as computer science. Past transitions such as the IT revolution ultimately led to robust growth in employment and real wages following physical and human capital adjustments, with some workers benefiting more than others. Tracking employment trends on an ongoing basis will help determine if the adjustment to AI follows a similar pattern. Consequently, we will continue to monitor. How AI is affecting the job market is quite predictable. The scale of it might be unprecedented, but the effect itself is not something that we haven't seen before in previous IT revolutions. It seems to me that the Industrial Revolution, which happened even longer ago, had a very similar effect where workers moved en masse from very physically demanding jobs to less physically demanding jobs because now they had these machines that were able to operate for them. And as a result, the amount of people that you needed to work on a farm or to work on roads were substantially less than beforehand. Similar effect seems to be playing out here again with AI. A lot of this automation by AI is expected to continue to increase even more. And the scale of it is something that people, the likes of Dario Amodei, the CEO of Anthropic, has voiced their concerns about because AI is already proven to be one of the most job disruptive technologies that humans have ever unleashed upon ourselves. Where this goes is anyone's best guess, but let's hope that with the increased amount of productivity that AI affords us, even while employment rates go down, we continue to flourish. What do you think about all of this? Do you think AI making its way into our workplace is a force for good, or are there certain concerns we should be worried about?